This is a video report analysis of Newpark Resources, Inc., an affiliation with Brick and Road Reports, an equity research program administered through Tulane University's A.B. Freeman School of Business. The equity analysts who conducted research detailed in this report include Mark Beck-Doss, Spencer Kirsch, Ethan Klein, and Brian Rabinowitz. The agenda for our presentation includes a brief company overview, a breakdown of Newpark's revenues, a description of the company's latest developments, an explanation of both our forecast of the company's financials and our company valuation, Newpark's strategy moving forward, and finally, our investment thesis. Newpark trades on the New York Stock Exchange under the ticker symbol NR. The company operates in the oil field services sector and focuses on supplying drilling fluids and mats and integrated services to E&P companies globally. Newpark is headquartered in the Woodlands, Texas. Currently, on November 19, 2014, Newpark's stock price is $11.72, while the company has a market capitalization of $988.56 million and 83.99 million shares outstanding. Looking back at Newpark's 5-year historical stock prices, the company's stock price reached a low of $2.63 in November 2009 and a high of $13.50 in October 2013. Newpark's domestic revenue accounted for roughly 68% of Newpark's revenues in 2013, whereas foreign revenue accounted for about 31%. More specifically, Newpark operates in 5 different geographic regions: the U.S., Canada, Europe, the Middle East and Africa, Latin America and Mexico, and the Asia-Pacific region. The U.S. accounts for 69% of revenue, Canada accounts for 5% of revenue, Europe, the Middle East and Africa accounts for 13%, Latin America and Mexico account for 10%, and the Asia-Pacific region accounts for 3%. Within these 5 geographic areas, Newpark provides products and services within 2 business segments: drilling fluid systems and mats and integrated services. Newpark's drilling fluid systems segment accounted for roughly 88% of total revenue as of year-end 2013, and its mats and integrated services segment accounted for the remaining 12% of revenues. In December 2012, Newpark acquired Alliance Drilling Fluids LLC, a provider of drilling fluids, proppants, and related services. Newpark acquired Alliance in an effort to expand its services to offer proppants, which are used in hydraulic fracturing. Also in December 2013, Newpark acquired Terra Firma Roadways, a provider of temporary roadway and worksite solutions. Then, in October 2013, Newpark announced a $40 million expansion to its mats manufacturing facility, which is located in Carencro, Louisiana. Newpark claims it will complete this expansion by early 2015. Lastly, in March 2014, Newpark sold its environmental services segment for $100 million to focus on its 2 main segments. For our forecast and valuation of Newpark, we developed a 3-factor linear regression model to forecast Newpark's revenues through year-end 2015. The revenue drivers of our regression model were a cumulative factor of PP&E, goodwill and intangibles leading 6 periods, historical WTI oil prices leading 2 periods, and total horizontal rig count in the U.S. For the remainder of our forecast, we calculated a 7% growth rate based on the average historical growth of the company. Newpark stock is currently trading at $11.72 per share. We developed a 12-month target price of $12, accompanied by a market performed stock rating over the same 12-month period. We determined a $12 stock price by using a comparable analysis of Newpark's peers and determined 4 different multiples to calculate stock price. The methods we used were price to earnings, price to book value, price to cash flow per share, and enterprise value over EBITDA. Each multiple was weighted equally, giving us a 12-month target price of $12. It is important to note that despite Newpark's recent impressive financial performance, the energy industry as a whole is suffering due to the recent drop in oil prices. We assume these factors have affected investors of oil field services companies in the short term, and for this reason, we estimate a market perform rating for Newpark stock in the future. However, if oil prices bounce back and investor confidence returns in the energy sector, we predict that Newpark's quality financial performance, constant growth, and excellent capital structure will lead the company to outperform our current estimate over the next 12 months. Newpark's strategic vision consists of expanding its match production facility to help service customer demand. Newpark also aims to decrease its business activity in Brazil due to Brazil's increasing government interference with U.S. companies. On a long-term note, Newpark is looking to expand in opportunistic international markets such as North Africa and the Middle East due to the lucrative wells present in these countries. In conclusion, Newpark's foreign growth will outpace its domestic growth in the future due to two main factors. First, a decline in the U.S. oil prices will decrease the company's domestic profits, and second, Newpark will keep expanding and generating long-term contracts abroad. We also believe Newpark will remain competitive against industry giants due to its specialized products and high margins. In addition, we predict Newpark will grow its match segment, which currently only makes up 12% of the company's revenues, yet boasts a 40% operating margin. Finally, Newpark's emphasis on research and development enables Newpark to produce advanced fluid systems, which will continue to provide the company with a sustainable competitive advantage. Disclaimer: the Birkenroad reports are produced solely as an educational program at Tulane University's Avery Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decisions. You should consult an investment professional and/or conduct your own primary research regarding any potential investment. Thank you.